Crypto isn't dead, it's just quietly making the next wave of millionaires. So what are they doing differently? How are smart investors turning small portfolios into massive gains while everyone else is scared to jump in? In this video, I'll break down the proven principles from how to be a crypto millionaire, covering the mindset, timing, and strategies that separate winners from the hype chasers. Ever felt like you missed your chance in crypto, or that it's too risky to start now? The truth is, the real opportunity might just be starting again. Stick around, and by the end, you'll know how to approach crypto the smart way, with strategies to build long-term wealth, not just chase the next pump. Close your eyes for a moment and imagine this. It's the year 2010. A college student in Florida trades 10,000 Bitcoins for 2 pizzas. Back then, those coins were worth barely $40. Today, they'd be worth hundreds of millions of dollars. That story isn't just a crypto legend. It's a reminder of how new wealth is born, often quietly, before the world realizes what's happening. We are living through one of those rare moments again. The digital revolution isn't coming, it's here. And just like the early days of the internet or the first wave of tech startups, the world of cryptocurrency is shaping the next generation of millionaires. But here's the truth. Becoming a crypto millionaire isn't about luck. It's about understanding, about timing, about psychology. You see, wealth creation in crypto follows a familiar rhythm: innovation, adoption, and explosion. The people who understand the rhythm before everyone else are the ones who win big. Think of the 1990s when people were buying domains for a few dollars that later sold for millions. Or the early days of Amazon, when investors thought Jeff Bezos was crazy for selling books online. That same pattern is repeating now, but faster, because money itself has gone digital. The idea of decentralized money, currency that isn't controlled by any government or bank, sounded like science fiction a decade ago. But now, it's reshaping finance, business, and even culture. Bitcoin isn't just code, it's confidence. Ethereum isn't just technology, it's infrastructure for the digital future. And beyond them lies a world of tokens, decentralized apps, NFTs, and blockchain networks that are rewriting the rules of wealth. Now you might be thinking, isn't crypto risky? Of course it is. But every opportunity that creates new millionaires starts out risky. The internet was risky. Electric cars were risky. Artificial intelligence was risky. The real question isn't whether crypto is risky, it's whether you can afford to ignore it. Lazy billionaires, tech pioneers, and forward-thinking investors all share one thing in common. They see where the world is going, not where it's been. They position themselves early. They learn before they earn. They understand that in times of disruption, money moves fastest to those who act before the masses wake up. Becoming a crypto millionaire isn't about chasing coins. It's about mastering a mindset. It's about learning how digital assets work, how markets move, and how human behavior drives price far more than math ever could. Because behind every surge and crash, behind every token and blockchain, there's psychology, fear, greed, hope, and belief. So before we dive into the strategies, the coins, the tech, and the roadmaps, I want you to absorb one core truth. The greatest wealth transfers in history happen when technology meets timing. And right now, that intersection is glowing like a signal in the dark. We're not just talking about making money. We're talking about understanding the new architecture of the world, how blockchain is redefining trust, ownership, and value itself. The people who get this now will be the financial architects of tomorrow. As Morgan Housel once said, getting rich is not about being smart. It's about being consistent. In crypto, that means learning, holding, adapting, and staying calm when the world panics. It means having conviction when others have confusion. So let's begin this journey. Let's explore the stories, strategies, and systems that turn digital ideas into real fortunes. By the time you reach the end of this audiobook, you won't just understand how people become crypto millionaires. You'll understand how you can become one. In the next chapter, we'll travel back in time to the origins of Bitcoin, the spark that ignited the digital wealth revolution, and uncover what the world missed while it was busy doubting the future. Picture this, it's 2008. The global economy is collapsing. Banks are failing, governments are scrambling, and ordinary people are losing everything. Amid the chaos, a mysterious figure named Satoshi Nakamoto publishes a white paper online titled Bitcoin, a peer-to-peer electronic cash system. It's only 9 pages long, but those pages will ignite a revolution. The concept is simple yet radical. Money without middlemen. No banks, no governments, no corporations controlling transactions. A system where trust isn't given to people, but to code. A network that no one owns, yet everyone can use. It was the ultimate act of rebellion against a broken financial system. In January 2009, the first Bitcoin block was mined, the Genesis block. Embedded in it was a hidden message. The Times, 3 January 2009, Chancellor on brink of second bailout for banks. It was both a timestamp and a statement. Bitcoin wasn't born in a lab. It was born in protest. It was a new kind of money for a new kind of world. But let's be real, no one took it seriously at first. Bitcoin was worth virtually nothing. You could mine it on a laptop. It was a toy for coders, an experiment in digital economics. Most of the world ignored it, but a few visionaries didn't. They saw something deeper, a system that could challenge the very foundation of global finance. Early adopters like Hal Finney, one of the first Bitcoin participants, saw its potential long before Wall Street did. In those early days, Bitcoin wasn't just about profit. It was about philosophy. It was about decentralization, transparency, and freedom. But then, as more people began to understand what it could do, something shifted. In 2011, Bitcoin crossed the $1 mark for the first time. By 2013, it hit $1,000. The first wave of wealth was born. Ordinary people who had believed early, who had bought a few $100s worth of Bitcoin when it was still a whisper in tech circles, were suddenly sitting on small fortunes. One of those early believers was a man named Eric Finman. At just 12 years old, he bought $1,000 worth of Bitcoin in 2011 after hearing about it from his older brother. By 2017, that investment had grown to over $4 million. He didn't come from wealth. He didn't have insider connections. He just saw what others didn't and acted. That's the beauty and brutality of innovation. It rewards those who believe before proof exists. It's the same with Bitcoin. The people who laughed at it in 2010 were the same ones regretting it in 2020. But this first wave of crypto wealth did more than make people rich. It proved a point. It showed that digital assets could hold real value. It made the world pay attention. Suddenly, Bitcoin wasn't a joke. It was a movement. Governments began to notice. Banks began to study it. And a new era of finance began to unfold. Yet as Bitcoin rose, so did skepticism. Critics called it a bubble, a scam, a fad. They said it would crash, and it did several times. But each crash brought a new wave of believers, and with every recovery, the ecosystem grew stronger. Because behind the price was something more powerful than speculation. Belief. Belief in decentralization. Belief in technology. Belief in a world where money wasn't dictated by borders or bureaucrats. That belief fueled innovation, and soon Bitcoin wasn't alone. New cryptocurrencies emerged, each promising to improve on the original. Ethereum, Litecoin, Ripple, Cardano. The digital frontier expanded rapidly. The lesson from the birth of Bitcoin is clear. Every great wealth revolution begins with doubt. The majority always resists change until it's too late. The internet, electric cars, AI, each face the same skepticism. Crypto is just the latest chapter in that story. So if you're wondering whether it's too late to build wealth in crypto, remember this: Bitcoin was the beginning, not the end. We are still early in the digital asset revolution, and those who learn now, who understand the patterns, the psychology, and the strategies, those are the ones who will ride the next wave of millionaires. In the next chapter, we'll explore the rise of Ethereum, the innovation that turned blockchain from a currency into a platform, and why it might just be the most important key to the next generation of crypto wealth. By 2015, Bitcoin had already captured the world's attention. It had proven that digital money could exist outside the control of governments and banks. But a new question began to surface among developers and visionaries. What if blockchain could do more than just store and transfer money? What if it could also store agreements, programs, and entire systems of trust? That's where Ethereum entered the story. A revolution not just in digital currency, but in digital possibility. Ethereum was the brainchild of a young programmer named Vitalik Buterin, a quiet genius who saw Bitcoin's strength and its limits. He realized that while Bitcoin was revolutionary as a store of value, it was not flexible enough to handle complex interactions. So he proposed something radically new: a blockchain that could run smart contracts, self-executing agreements written into code. Imagine a world where you could buy a house, sign a loan, or invest in a company, all without lawyers, brokers, or middlemen. The contract itself would live on the blockchain, transparent, unchangeable, and fully automated. That was Ethereum's promise: to make trust programmable. When Ethereum launched in 2015, it didn't just introduce a new cryptocurrency, it created a new ecosystem. Ether, the currency that powered the network, became the fuel for thousands of decentralized applications, or dApps. Suddenly, developers could build everything from decentralized finance, DeFi platforms, to digital art marketplaces, all on top of Ethereum. And then came the explosion. In 2017, the first wave of initial coin offerings, ICOs, launched. Startups raised billions of dollars in a matter of months by issuing their own tokens on Ethereum. It was the Wild West of finance, chaotic, risky, and full of both promise and fraud. Many projects failed, but a few changed the world. DeFi protocols like Uniswap and Aave transformed how people borrowed, lent, and traded assets without banks. Artists and creators found new freedom through NFTs, digital tokens that gave ownership to creative works. And all of this was made possible because Ethereum gave blockchain a brain. It made it smart. Think of it this way: Bitcoin was digital gold, a store of value. Ethereum was digital oil. It powered the engines of innovation. The lazy billionaires and forward thinkers recognized this early. They weren't chasing short-term profits. They were positioning themselves in the infrastructure of the future. Take the example of Joe Lubin, one of Ethereum's co-founders. He didn't just invest in the technology, he built around it, founding Consensys, a company that became a cornerstone of the Ethereum ecosystem. Lubin's foresight turned him from a coder into one of the most influential figures in blockchain history. But here's what separates those who become crypto millionaires from those who don't. Understanding utility. Lazy billionaires don't invest in hype. They invest in use cases. They look for technologies that solve real problems, and Ethereum did exactly that. It made blockchain useful to everyone, not just tech enthusiasts. Ethereum also introduced a powerful concept, the network effect. The more developers built on it, the more valuable it became. The more people used it, the more essential it grew. It was the foundation of an economy where innovation multiplied exponentially. And yet, Ethereum wasn't perfect. It faced challenges, scalability, high fees, energy consumption. But with every obstacle came evolution. The Ethereum community worked tirelessly to upgrade the network, culminating in the merge, which shifted it from energy-intensive mining to a cleaner, proof-of-stake model. That's the thing about crypto. It rewards those who adapt. Just like the early internet, it's messy, unpredictable, and sometimes chaotic. But within that chaos lies opportunity. The people who can spot value amid the noise. The ones who see structure where others see speculation. Those are the ones who win. Ethereum proved that crypto was more than a currency. It was a platform, a digital universe where money, code, and creativity coexist. It turned blockchain from a niche idea into the backbone of the decentralized economy. So if Bitcoin was the first revolution, freedom from financial control, Ethereum was the second, freedom to create, innovate, and build new worlds. And we're still early. The applications being built on Ethereum today, AI-integrated DeFi, tokenized assets, real-world NFTs, are laying the groundwork for trillion-dollar industries. In the next chapter, we'll step into the age of altcoins, where innovation exploded, competition intensified, and everyday investors began their journeys toward becoming crypto millionaires. Because the real wealth in crypto doesn't come from chasing Bitcoin, it comes from finding the next Ethereum before the world does. After Bitcoin and Ethereum laid the foundation for the digital economy, a new era began, one of experimentation, innovation, and fierce competition. This was the age of altcoins, a period that turned early adopters into millionaires and skeptics into believers. It was chaotic, thrilling, and often confusing, but hidden within the noise were life-changing opportunities. Altcoins, short for alternative coins, are any cryptocurrencies that aren't Bitcoin. Some were built to improve Bitcoin's technology. Others were designed to power new ecosystems or solve specific problems. But the essence of the altcoin revolution was this: innovation without permission. Anyone, anywhere, could create a token, build a community, and challenge the status quo. It started slowly. Projects like Litecoin promised faster transactions. Ripple sought to bridge banks and blockchain. Then came Cardano, Polkadot, Solana, each introducing new technology, new promises, new visions for the future. For investors paying attention, this wasn't just diversification, it was discovery. Think of it like the early internet. In the 1990s, thousands of startups launched, each with wild ideas. Most failed. But a few, Amazon, Google, eBay, became trillion-dollar titans. The same dynamic applies to altcoins. The majority will fade, but the few that survive can change your life forever. And that's exactly what happened to thousands of everyday people between 2017 and 2021. Consider the story of a young engineer from Texas who invested $2,000 into Binance Coin, BNB, when it was under $1. 2 years later, that small bet was worth over $500,000. He didn't build anything. He didn't work overtime. He simply recognized value before the crowd did. Or take the case of early Solana investors who saw the potential in a high-speed, low-fee blockchain designed for decentralized apps. While the market doubted, they bought quietly. When Solana exploded during the DeFi boom, many of those early holders found themselves sitting on seven-figure portfolios. But here's the truth. Most people don't get lucky. They get prepared. Lazy billionaires and smart investors don't throw darts at the crypto wall and hope for miracles. They analyze patterns. They look for fundamentals. They understand that every new altcoin project falls into one of three categories: hype, utility, or revolution. And only one of those truly changes lives. Hype coins come and go. They spike fast and crash faster. Utility coins have staying power. They serve a purpose in an ecosystem. And revolutionary coins? They rewrite the rules entirely. The trick is spotting them early. You look at the team. Are they experienced? The technology. Does it solve a real problem? The tokenomics. Does it reward holders or just enrich founders? The community. Are they loyal or just chasing quick profits? When you combine logic with timing, that's when magic happens. Because in crypto, timing is everything. A few weeks can be the difference between a small gain and a fortune. But here's the comforting truth. You don't have to catch every wave. You just need one right move in the right season. The age of altcoins also revealed something profound about human psychology. People weren't just investing in technology, they were investing in belief. Communities formed around coins like religions. Investors didn't just hold assets, they held identities. Dogecoin, created as a joke, became a billion-dollar phenomenon because people believed. It taught the world that in crypto, community equals value. Of course, not every story ended in riches. For every millionaire, there were dreamers who lost it all chasing hype. But even that had a lesson. Markets move in cycles, and emotion is the biggest driver of both booms and busts. The altcoin era also marked the birth of DeFi, decentralized finance. For the first time, you could lend, borrow, stake, and earn interest without a bank. Your crypto wasn't just sitting in a wallet, it was working for you. This was the moment when the crypto economy became real. By the end of 2021, there were over 20,000 cryptocurrencies. The market was wild, unpredictable, and full of noise. But underneath it all, the message was clear. We were witnessing the rise of digital capitalism, where anyone with an internet connection could participate in the next great wealth wave. The age of altcoins taught the world that diversification wasn't just a safety strategy, it was a wealth strategy. It rewarded curiosity, patience, and conviction. So if Bitcoin was the birth of digital gold and Ethereum was the rise of smart money, the age of altcoins was the explosion of possibility, the chance for ordinary people to stake their claim in the future of finance. In the next chapter, we'll explore the psychology of crypto millionaires, the mindset, patience, and emotional intelligence that separate those who make millions from those who lose everything in the chase. In the world of cryptocurrency, it's easy to believe that wealth is built through timing. Buy low, sell high, and repeat. But if you look closer, the real difference between those who become crypto millionaires and those who lose everything isn't strategy, it's psychology. The market rewards not just intelligence, but emotional mastery. Picture this: two investors, Alex and Jordan, both buy Bitcoin at $5,000. When it hits $10,000, Alex sells in excitement, doubling his money. Jordan, however, holds steady, understanding that the true potential lies years ahead. When Bitcoin later soars past $60,000, Jordan's calm patience transforms into wealth, while Alex watches in regret. Same opportunity, same asset, different mindset. This is where the psychology of money meets the psychology of crypto. Because crypto isn't just volatile, it's emotionally brutal. Prices swing wildly. Narratives shift daily. One tweet can change everything. To thrive in this space, you don't just need knowledge. You need nerves of steel. Crypto millionaires have a few key traits that set them apart. First, they detach from emotion. They don't let greed drive them to chase pumps, nor fear force them into panic selling. When everyone else is screaming, they're analyzing. When markets crash, they see discounts, not disasters. Second, they think long-term. The impatient trader is constantly checking charts, jumping in and out, reacting to every candle. The true investor, however, looks at the decade, not the day. They understand that Bitcoin, Ethereum, and other blue-chip cryptos move in 4-year cycles, each halving event tightening supply and resetting the market. They play the long game. Third, they embrace discomfort. When markets collapse and everyone swears crypto is dead, that's when the seeds of the next bull run are planted. Crypto millionaires understand that pain precedes growth. They endure winters to enjoy summers. And here's the most surprising truth. Many of the wealthiest people in crypto didn't start with millions. They started with conviction. They studied the technology. They understood the risk. And most importantly, they stayed consistent. Even during crashes, they invested small amounts, month after month, letting time and compounding do the heavy lifting. Think about the story of Sarah, a 29-year-old teacher from California. In 2018, when the market crashed by 80%, she ignored the panic. Every month, she bought $200 worth of Ethereum. People told her she was wasting money on internet coins. By 2021, her patience turned into a portfolio worth over $500,000. She didn't get lucky, she stayed steady. This mindset goes beyond crypto. It's about emotional resilience in the face of chaos. Because crypto markets test you constantly, they whisper, sell now before it drops, or buy more before you miss out. And that's where discipline becomes your greatest weapon. Crypto millionaires also know when to take profits. They understand that unrealized gains are just numbers until you secure them. They take some chips off the table during euphoric peaks and reinvest when fear returns. It's not timing the market, it's understanding the psychology of the crowd. And make no mistake, the crowd is almost always wrong. When everyone is euphoric, danger is near. When everyone is terrified, opportunity is everywhere. As Warren Buffett famously said, be fearful when others are greedy and greedy when others are fearful. That quote might have been written decades before Bitcoin, but it perfectly defines crypto psychology. Crypto millionaires master the art of delayed gratification. They don't need to be right today. They just need to be in the game tomorrow. They don't chase every coin or hype trend. Instead, they find projects with strong teams, real innovation, and long-term potential, then let time do its work. They also diversify, not just across coins, but across strategies. Some invest in DeFi. Others hold NFTs or stake assets for passive income. The key is to build multiple income streams at work even while you sleep. Because true wealth isn't about how much you earn, it's about how long your money works for you. But here's the biggest mindset shift. Crypto millionaires understand self-education is power. The more they learn, the less they fear. They study blockchain fundamentals, market cycles, and tokenomics. They don't follow hype, they understand it. Knowledge becomes their armor in a battlefield of speculation. So if you're chasing wealth in crypto, remember, your biggest enemy isn't volatility, it's your own reaction to it. The market will test your patience, your confidence, and your discipline. But if you can master your emotions, you can master your financial destiny. The next chapter takes us deeper into the mindset of the future. A world where automation, AI, and blockchain merge to create unstoppable streams of passive income. Because once you understand the psychology of wealth, the next step is designing systems that make you rich, even while you're asleep. Imagine waking up in the morning, grabbing your coffee and checking your portfolio, not because you're anxious about the market, but because your money has been working for you while you slept. This is not a dream. This is the dawn of automated wealth. A new era where blockchain, artificial intelligence, and automation converge to create systems that generate income 24/7 without your constant involvement. In traditional finance, you needed to trade time for money. You worked, you earned, and when you stopped working, the income stopped too. But crypto shattered that logic. It introduced staking, yield farming, liquidity mining, and algorithmic trading, ways for your money to multiply itself through decentralized networks that never sleep. Let's start with staking. When you stake your crypto, you lock your tokens into a network to help validate transactions and secure the blockchain. In return, you earn rewards, much like earning interest but without the bank. Ethereum, Cardano, Solana, and countless others offer staking opportunities that pay anywhere from 4% to 15% annually. And the best part? You don't have to manage it daily. It's passive, predictable, and powerful. Then there's yield farming, a more advanced but incredibly lucrative strategy. It's the digital equivalent of renting out your money. You lend your crypto to decentralized exchanges, and in return, you earn a portion of their trading fees or token rewards. Platforms like Uniswap, Curve, and Avi became the foundation for an entirely new financial system, one that pays you instead of charging you. But here's where things get even more interesting: AI automation. Artificial intelligence has begun to reshape the way investors interact with crypto markets. There are now AI-powered bots that monitor price movements, analyze patterns, and execute trades faster than any human could. These bots don't sleep, don't get emotional, and don't panic. They follow data, not dopamine. Some investors use AI-driven tools to rebalance their portfolios automatically. Others use bots that detect arbitrage opportunities between exchanges, capturing profits from small price differences in real time. This is the kind of efficiency that was once exclusive to Wall Street hedge funds, but now it's in the hands of everyday investors. Think of it this way: your portfolio can become a digital employee. It doesn't take breaks, it doesn't get sick, it just works endlessly, executing code and compounding your wealth. The smartest investors of the future won't be the ones who work the hardest. They'll be the ones who design systems that work for them. One such example is DeFi aggregators, Platforms like Yearn.finance that automatically move your funds to the highest yielding opportunities in the market. Instead of you spending hours researching where to put your money, the protocol does it for you. It's like having an AI financial advisor coded to maximize your returns. Now let's talk about tokenized passive income. Through blockchain, real-world assets like real estate, music royalties, and even artwork are being tokenized, allowing you to own fractions of income-generating assets. You could own 0.1% of a luxury hotel in Miami or a song's royalty stream and earn income directly in your crypto wallet. It's financial inclusion at a level the world has never seen before. What does this mean for you? It means that wealth creation is no longer just about being early, it's about being efficient. You don't have to predict the next big coin to become financially free. You can build steady, automated systems that pay you over time. You become the architect of a machine that prints freedom. And yet there's a deeper truth here. The richest people in this new digital era won't just use automation to earn, they'll use it to learn. AI can track your financial habits, suggest better investment strategies, and even teach you through adaptive models. It's a partnership between human vision and machine precision. But don't mistake automation for laziness. The lazy billionaires of the crypto age are not idle. They are strategic. They spend their time designing systems that reduce effort and increase output. They understand that the best kind of wealth is self-sustaining. Of course, with opportunity comes responsibility. Automated systems must be monitored. Smart contracts can fail, and markets can change. The difference between winning and losing often lies in how well you understand the tools you're using. Automation doesn't replace wisdom, it amplifies it. It magnifies your strengths, but can also expose your weaknesses. So as you step into this new frontier, never stop learning. Your best investment is still the one you make in your own mind. In the next chapter, we'll explore DeFi dominance, how decentralized finance is rewriting the rules of money, banking, and investment. You'll see how the power once reserved for financial elites is now in your hands, and how this shift could make you the next crypto millionaire. Welcome to the heart of the crypto revolution, decentralized finance, or simply DEFI. If Bitcoin was the spark that lit the financial fire, DeFi is the inferno that's burning down the old banking system. It's not just about trading coins anymore. It's about rebuilding the entire financial architecture of the world, from savings and loans to insurance and investments, without middlemen, paperwork, or borders. Think about it for a moment. For over a century, banks have been the gatekeepers of money. You wanted to borrow. They decided if you were worthy. You wanted to save. They set the interest rate. You wanted to invest. They took a commission. In the traditional system, money doesn't move without permission. DeFi flipped that script. It said, you don't need permission. You just need a wallet. At its core, DeFi is built on smart contracts, self-executing programs that live on the blockchain. These contracts replace bankers, brokers, and bureaucracy. They don't care about your credit score or nationality. They don't discriminate. If you meet the code's conditions, the transaction executes instantly and transparently. Take Uniswap, for example, a decentralized exchange that allows users to swap tokens directly from their wallets. No bank, no account, no approval, just pure peer-to-peer finance powered by algorithms. Or Avi and Compound, where users can lend or borrow crypto assets, earning interest or accessing liquidity with just a few clicks. And the best part? In DeFi, you become the bank. When you provide liquidity to a decentralized exchange, you earn fees from every trade that passes through your pool. When you lend your crypto, you collect interest, often far higher than what any traditional bank would ever pay. The power of financial institutions has shifted back to the individual. But this isn't just about making money, it's about reclaiming control. For decades, people trusted banks with their savings, only to watch inflation erode their wealth while fees quietly drain their accounts. DeFi reintroduces trust, but this time, the trust is in math and code, not corporate executives. Let's look at a real-world scenario. During the 2020 DeFi boom, an investor named Tony began staking his Ethereum into various lending protocols. He wasn't a developer or a Wall Street insider, just a tech-savvy enthusiast. Within 2 years, the interest and rewards from his DeFi investments turned his modest savings into a portfolio worth over $1.2 million. He didn't get lucky, he got early, and he got educated. This kind of transformation is what DeFi offers to anyone willing to learn how it works. It's open, transparent, and accessible to all. Yet it's not without risk. Smart contract bugs, hacks, and rug pulls are part of the ecosystem's growing pains. But for those who understand risk management, these obstacles are opportunities. The beauty of DeFi is its speed of innovation. Every few months, new protocols emerge, some focusing on yield optimization, others on insurance, derivatives, or cross-chain interoperability. It's an evolving playground of financial creativity. And while traditional banks take years to approve a new product, DeFi developers launch new features overnight. Consider Curve Finance, which optimized stablecoin trading and offered liquidity providers consistent returns. Or MakerDAO, which introduced the world to DAI, a stablecoin backed by crypto collateral rather than fiat. These platforms didn't just compete with banks, they redefined what banking could be. And now DeFi is merging with traditional finance in ways few could have predicted. Major institutions are quietly exploring blockchain integrations, tokenizing assets, and even holding crypto on their balance sheets. They've realized that if you can't beat the blockchain, you join it. But here's the key insight for anyone aspiring to become a crypto millionaire. DeFi rewards participation. Unlike the old system, where profits went to CEOs and shareholders, DeFi distributes its wealth to the users who provide liquidity, stake tokens, and vote in governance decisions. It's not just investing, it's ownership in the system itself. The lazy billionaires of the DeFi world aren't chasing hype. They're positioning themselves in ecosystems that compound over time. They reinvest their rewards, farm responsibly, and diversify across protocols. They're not day traders, they're architects of automated wealth. DeFi isn't a side movement anymore. It's becoming the backbone of a new global economy, borderless, frictionless, and fully digital. It's money without middlemen, finance without permission, and opportunity without limits. And as we move forward, DeFi will merge with emerging technologies like AI and real-world tokenization, creating an unstoppable financial network that works for everyone. In the next chapter, we'll dive into the NFT revolution, where art, culture, and technology collided to create a brand new asset class. Because while DeFi redefined money, NFTs redefine value itself. In 2021, a single JPEG image called Everydays, the first 5,000 days by the digital artist Beeple, sold for $69 million at Christie's auction house. To the traditional art world, it was unthinkable. To the crypto world, it was inevitable. That moment marked the arrival of a new era in digital ownership, the age of NFTs, or non-fungible tokens. NFTs exploded into mainstream culture seemingly overnight. But to understand their real power, you have to look beyond the headlines, beyond the hype, and see what they truly represent. NFTs are not just pictures or collectibles. They're digital proof of ownership. They're the certificates that say, "This is mine," in a world where digital things can be copied endlessly. Until NFTs, ownership online was murky. You could save an image, download a song, copy a meme, but you didn't own it. The blockchain changed that. By recording each NFT on a transparent ledger, it gave creators and collectors the ability to verify authenticity, track provenance, and assign value to something intangible. At first, NFTs were all about art, digital masterpieces, pixel avatars, and 3D animations. But soon they evolved into something much bigger. They became passports to digital economies. Owning an NFT could grant you access to exclusive communities, events, or metaverse lands. In short, NFTs turned ownership into an experience. Consider the story of a young artist named Micah Johnson, a former baseball player who launched a character called Aku. His NFT collection about a young black astronaut captured hearts around the world, earning millions and inspiring a movement. It wasn't just about art, it was about storytelling, empowerment, and vision. That's the real power of NFTs. They merge emotion with technology. They turn creativity into currency. And yet the NFT boom wasn't just about individual success stories. It reshaped entire industries. Musicians began selling albums as NFTs, keeping ownership of their work and bypassing record labels. Writers tokenized books. Fashion houses launched digital clothing lines. Real estate developers even started selling virtual properties in metaverses like Decentraland and the Sandbox. To some, it sounded absurd. Why pay for a plot of land that only exists in pixels? But to those who understood the digital future, it made perfect sense. If people spend hours in their lives online, then digital space becomes real space. If we socialize, play, and work in virtual worlds, then digital property has real value. That's why major brands like Nike, Adidas, and Gucci jumped in, creating NFT collections and digital wearables. They weren't chasing trends. They were adapting to the next generation of consumers who value digital identity as much as physical possessions. But here's what separates the smart investors, the lazy billionaires, from the hype chasers. They don't just buy NFTs because they're trending. They study utility. They ask, what does this NFT do? Does it generate royalties? Does it grant membership or revenue sharing rights? Does it hold long-term value beyond speculation? Because while millions chased monkey pictures, a handful of investors quietly acquired NFTs with function. Digital real estate that earns rent, music NFTs with royalty payouts, and game assets that generate income through play-to-earn models. These weren't just collectibles, they were assets. In this way, NFTs redefined not just art, but the entire concept of wealth. They introduced digital scarcity to a world of infinite replication. They taught creators to monetize directly without middlemen. And they opened the door for millions of artists, designers, and innovators to join the financial revolution without needing permission from anyone. But let's be honest, the NFT world wasn't all glory. For every success story, there were hundreds of failed projects and scams. Many people bought into hype without understanding value, only to watch their investments vanish. Yet that's the cycle of innovation. Chaos before clarity. And clarity is coming. We're moving from speculative NFTs to functional NFTs. Think tickets that can't be counterfeited, property deeds stored on-chain, educational credentials that can't be forged. The next NFT revolution won't be about profile pictures, it'll be about proof. Here's what makes this era so exciting. We're witnessing the fusion of creativity and capital. Artists are becoming entrepreneurs. Investors are becoming patrons. And the blockchain is becoming the bridge that connects imagination with income. NFTs are teaching the next generation that wealth isn't limited to factories, stocks, or gold. Wealth is created from ideas. If you can create something that people value and prove its authenticity, you can build your empire from pixels and code. In the words of Naval Ravikant, the internet democratized publishing. The blockchain democratizes ownership. That's the essence of the NFT movement. It's not just art, it's a financial and cultural revolution rolled into one. In the next chapter, we'll explore Metaverse money, how digital worlds are becoming the new frontier for investment, and how the next wave of crypto millionaires is being built not from trading, but from owning the digital future itself. Close your eyes for a moment and imagine this. You step into a digital world where skyscrapers shimmer with neon light. Luxury stores sell both virtual and physical items, and people walk around wearing avatars that reflect their wildest dreams. A world where concerts, businesses, and entire economies exist entirely online. That's not a scene from Ready Player One. It's the Metaverse, and it's becoming one of the most exciting frontiers for wealth creation in the 21st century. The Metaverse isn't just a game or a virtual hangout. It's the next evolution of the internet, an immersive, persistent digital space powered by blockchain technology. Think of it as a parallel economy where digital land, digital art, and digital experiences hold real monetary value. This is where crypto meets creativity and where millionaires are quietly being made. Let's take a step back. When people first heard about digital land selling for thousands or even millions of dollars, most laughed. Who would buy fake land, they said. But the same thing was once said about domain names in the 1990s. Back then, people couldn't understand why anyone would pay for something intangible. Fast forward a few decades, and domain names like business.com and voice.com have sold for tens of millions. History, as it turns out, loves to repeat itself, especially when innovation is involved. In platforms like Decentraland, The Sandbox, and Otherside, digital real estate is being developed, traded, and monetized just like property in the real world. You can build art galleries, casinos, or virtual offices. Brands like Atari, Adidas, and even Sotheby's have already set up shop in the Metaverse. And with blockchain, ownership of every plot is verifiable and transferable, creating a new form of scarcity, digital scarcity. But here's where it gets interesting. The Metaverse is powered by its own economies. Each world has its native tokens, like mana for Decentraland or sand for the Sandbox. These tokens fuel transactions, pay for goods and services, and reward creators. The early adopters who bought these tokens or virtual lands when no one cared are now sitting on fortunes. For example, one early investor bought parcels of land in Decentraland for just $20 each in 2018. By 2022, some of those plots were selling for over $15,000. Another investor built a virtual nightclub that charges entry fees in crypto and hosts live DJ sets streamed from around the world. He earns passive income from an asset that doesn't physically exist. And that's the brilliance of this new economy. But metaverse money isn't just about virtual real estate. It's about digital ownership. You can buy wearable NFTs for your avatar, rent out virtual billboards, or even invest in tokenized virtual businesses. Some creators are building entire metaverse cities where users can live, work, and earn, all within a digital economy that never sleeps. And this is where crypto's true power shines. The metaverse runs on blockchain, not because it's trendy, but because it ensures transparency, authenticity, and freedom. When you buy a digital asset, you truly own it. No central company can take it away. It's the foundation of a user-owned internet, a Web3 world where the participants, not corporations, control the value. Smart investors, the lazy billionaires of this era, see the metaverse not as fantasy, but as real estate in the digital future. They buy early, build valuable assets, and let demand grow. They understand that as more people spend time online, the value of virtual space will rise exponentially. After all, the attention economy has always been the most valuable one, and the metaverse captures attention like nothing else. Of course, not every metaverse project will succeed. Just like the dot-com bubble, there will be failures. But the few that do thrive could define the next trillion-dollar industries. Gaming, entertainment, education, real estate, social media, all are merging inside these virtual ecosystems. The future billionaire won't be the person who owns the most land in the physical world, but the one who controls prime digital property in the metaverse. We're also seeing a new wave of metaverse jobs emerging: virtual architects, 3D designers, event planners, NFT developers. People are making real incomes designing worlds, creating avatars, or hosting virtual experiences. It's the next gig economy, and it's global. And while some still dismiss the metaverse as a trend, major corporations are quietly preparing for this shift. Meta, Microsoft, Nvidia, and Apple are investing billions in AR and VR technology. They're not guessing, they're positioning. Because they know the next internet won't just be something we look at, it'll be something we live inside of. So how can you position yourself? Learn, explore, buy digital assets that have utility, engage with early projects, understand the technology before the masses do. Because when adoption comes, and it will, the people who build early will be the landlords, entrepreneurs, and pioneers of the new digital age. The metaverse isn't just a virtual playground, it's an economic revolution. It's where creativity meets capitalism, and where every digital pixel has the potential to become a profit. In the next chapter, we'll go one step further and uncover the strategies of the crypto entrepreneurs, the visionaries who turned blockchain ideas into billion-dollar realities, and how their mindset can help you build your own crypto-powered empire. The world of cryptocurrency is often painted as a place for traders, speculators, and hobbyists. But beneath the headlines lies a smaller, more powerful group, the crypto entrepreneurs. These are the visionaries who are not merely investing in crypto. They are building the companies, platforms, and systems that create the digital economy itself. They are the architects of wealth in the blockchain era. Take the story of Vitalik Buterin, the co-founder of Ethereum. In his early 20s, Vitalik saw the limitations of Bitcoin and imagined something far greater, a blockchain that could run smart contracts. He didn't just theorize, he built. Today, Ethereum powers thousands of decentralized applications and billions of dollars in digital assets. Vitalik didn't just make money, He created an infrastructure that others could use to build their fortunes. Then there's Changpeng Zhao, founder of Binance. In 2017, he launched a cryptocurrency exchange in a highly competitive market. By understanding speed, user experience, and global demand, he turned Binance into one of the largest exchanges in the world in less than 3 years. Zhao didn't wait for opportunity to knock. He created it. Crypto entrepreneurs share some common traits that distinguish them from ordinary investors. First, they see opportunity before the crowd. They don't wait for trends. They anticipate them. They notice inefficiencies in the market or gaps in the technology and act decisively. Second, they embrace calculated risk. While volatility terrifies most, crypto entrepreneurs leverage it. They understand that risk, when paired with research and strategy, is the currency of growth. Many of the biggest fortunes in crypto were made during periods of extreme uncertainty. Third, they think in ecosystems, not isolated assets. A token is not just an investment, it's a utility, a product, a network. Crypto entrepreneurs build systems where multiple components reinforce each other. A token fuels a platform drives adoption increases token value, and token value funds further innovation. It's a self-reinforcing cycle of wealth creation. Consider DeFi protocols like Uniswap or Iavi. Their founders didn't just create products, they built ecosystems. Users who engage with these platforms generate liquidity, which in turn generates revenue for both users and developers. The economy is decentralized, but the value flows to those who build the backbone. NFT entrepreneurs operate similarly. Artists and developers tokenize intellectual property, digital real estate, and experiences. They create scarcity, community, and utility simultaneously. Early NFT project founders and collectors have turned modest investments into seven-figure fortunes, not through trading alone, but by creating value that others are willing to pay for. Another key strategy is leveraging networks. Crypto entrepreneurs understand that wealth multiplies when you involve a community. Governance tokens, DAO memberships, and collaborative projects incentivize early adopters and supporters, turning them into co-creators. This network effect accelerates adoption and compounds value far beyond what a single person could achieve alone. But the journey isn't without challenges. Regulation is uncertain, markets are volatile, and technological failures are common. Entrepreneurs must navigate hacks, software bugs, and shifting global sentiment. Yet it's precisely these obstacles that create opportunity. Where others see risk, they see potential. Where others panic, they innovate. The mindset of a crypto entrepreneur extends beyond finance. It's a mindset of creation, resilience, and vision. Lazy billionaires of the crypto world don't chase trends. They build systems, products, and networks that outlast market cycles. They understand that wealth isn't just about buying the right token. It's about owning and shaping the infrastructure that supports the token. Real-world examples illustrate this principle. Consider the rise of crypto gaming companies that combine NFTs, play-to-earn models, and immersive experiences. Early founders, developers, and token holders have amassed fortunes because they built entire digital economies, not just speculative assets. The takeaway for aspiring crypto millionaires is clear. Don't just invest in crypto, participate in its creation. Study the protocols, understand the use cases, identify where value is being built, and position yourself in that system. Time your entry, hold strategically, and contribute where possible. Crypto entrepreneurship isn't reserved for billionaires or geniuses. It's available to anyone willing to think long-term, embrace technology, and act decisively. It's a mindset where wealth is the byproduct of solving problems, innovating, and empowering communities in a digital economy. As we close this chapter, remember this. While traders make money on volatility, entrepreneurs make fortunes on value creation. And as the digital economy continues to expand, the next wave of crypto millionaires will come from those who understand this distinction and act accordingly. In the next chapter, we'll explore the future of cryptocurrency, emerging trends, untapped opportunities, and strategies to position yourself for the next decade of unprecedented growth in the digital asset space. As we approach the final frontier of our journey into crypto wealth, it's time to look ahead. The digital asset ecosystem that began with Bitcoin and Ethereum is evolving faster than most people realize. And if you want to become a crypto millionaire, or even a multi-millionaire, you need to understand where the market is heading, not just where it has been. The first major trend is institutional adoption. Once viewed as a fringe market, crypto is now attracting hedge funds, asset managers, and even governments. Companies like Tesla, MicroStrategy, and Square have added Bitcoin to their balance sheets. Investment banks are launching crypto desks, and ETFs tied to digital assets are being approved in multiple jurisdictions. The old walls of finance are crumbling, and the institutions that once ignored crypto are now racing to catch up. Next, consider regulation. While uncertainty exists, it's important to see regulation as a framework, not a barrier. Clear rules legitimize the industry and attract more institutional money. Crypto entrepreneurs who understand regulatory landscapes will have a massive advantage, navigating compliance while still innovating. Those who ignore it risk costly mistakes, but those who embrace it can operate in a safer, larger, and more profitable market. Another transformative trend is Layer 2 solutions and scalability. Networks like Ethereum face congestion and high fees, but Layer 2 protocols, rollups, and sidechains are solving these problems, enabling faster and cheaper transactions. As usability improves, adoption grows, not just for crypto enthusiasts, but for everyday users, businesses, and even governments. The rise of Web3 and decentralized applications is also central to the future of crypto. We are moving toward an internet where users own data, creators earn directly, and communities govern themselves. NFTs, DeFi, DAOs, and Metaverse ecosystems are just the beginning. Those who participate in building these infrastructures now will reap the rewards as adoption explodes in the coming years. Cross-chain interoperability is another key driver. As blockchains learn to communicate with each other, liquidity and user access expand exponentially. Tokens can move seamlessly across ecosystems, DeFi protocols can interact without friction, and investors gain access to a broader array of opportunities. The days of siloed digital assets are ending, replaced by a truly global and connected financial ecosystem. Artificial intelligence is also reshaping crypto. From AI-powered trading bots to predictive analytics for tokenomics, AI accelerates decision-making and magnifies profits. Entrepreneurs integrating AI with blockchain are creating systems that operate autonomously, generating wealth while minimizing human error. Emerging sectors like decentralized insurance, tokenized real estate, and renewable energy-backed crypto assets are also worth noting. They represent areas where traditional finance is inefficient, and blockchain can provide transparency, security, and efficiency. These niches may be where the next wave of multi-million-dollar opportunities emerges. However, opportunities come with risks. Volatility, hacks, failed projects, and market sentiment swings remain constant threats. But the crypto millionaires we studied understand that risk is not something to fear. It is something to manage intelligently. They diversify, research, and participate in systems rather than gamble on hype. They see the landscape as a dynamic environment, not a fixed one. The key takeaway is this: the future of cryptocurrency is not about a single coin or token. It's about ecosystems, networks, and infrastructure. It's about positioning yourself where value will be created, not just where it already exists. And it's about thinking like an entrepreneur in a world where borders, intermediaries, and traditional limitations are disappearing. The next decade will likely produce more wealth in crypto than the previous one. Lazy billionaires, early adopters, and strategic participants will continue to accumulate power and influence, not by luck, but by foresight and disciplined action. In the final chapter, we'll bring it all together: the roadmap to becoming a crypto millionaire. This chapter isn't just theory, it's actionable. Step-by-step strategies, mindset frameworks, and systems you can implement immediately to position yourself for the next wave of crypto wealth. We've explored Bitcoin's rise, Ethereum's smart money revolution, the explosion of altcoins, the psychology of crypto millionaires, DeFi, NFTs, Metaverse opportunities, crypto entrepreneurship, and the future of digital finance. Now it's time to synthesize all of these lessons into a practical roadmap, your actionable guide to creating wealth in the crypto age. The first step is education. The crypto market evolves rapidly. Technologies, protocols, and trends emerge constantly. To stay ahead, you need to be a student of the ecosystem. Read white papers, watch tutorials, join communities, and follow credible thought leaders. Knowledge isn't optional, it's your most valuable asset. A lazy billionaire doesn't buy blindly. They understand deeply before committing capital. Next, start with blue chip assets. Bitcoin and Ethereum remain the bedrock of the crypto universe. They are the pillars upon which the next wave of wealth is built. For beginners, allocating a core portion of your portfolio to these assets provides stability, liquidity, and long-term growth potential. Remember, these aren't get-rich-quick plays. They're foundational investments for compounding wealth over years. After establishing a foundation, explore strategic altcoins. Look for projects with real utility, strong teams, and active communities. Analyze tokenomics, roadmap, and adoption potential. Avoid chasing hype-driven coins or pump-and-dump schemes. A disciplined approach separates those who create wealth from those who suffer losses. Next comes participation in DeFi and passive income systems. Stake, lend, and yield farm responsibly. Use automation where possible. AI trading bots, DeFi aggregators, and staking platforms allow your assets to work for you 24/7. Diversify across multiple protocols to reduce risk, and always understand the mechanics behind each system. Passive income is the engine that grows your wealth while you sleep. NFTs and Metaverse investments form another layer. Focus on assets with real-world or functional value. Digital real estate, NFT royalties, and access-based tokens. Avoid speculative frenzies unless you're prepared to accept total loss. Your goal is not to chase ephemeral trends, but to capture enduring digital value. Crypto millionaires also leverage entrepreneurship. Whether launching a token, building a platform, creating NFTs, or developing metaverse experiences, Building systems that generate income for others multiplies your wealth far faster than passive holding alone. Think like a creator, not just an investor. Risk management is essential. Never invest more than you can afford to lose. Diversify across assets, strategies, and ecosystems. Monitor projects for vulnerabilities and stay alert for scams or exploits. Discipline and prudence are as valuable as insight or timing in this market. Another critical factor is psychology. Emotional control, patience, and long-term thinking separate winners from losers. Don't let fear or greed dictate your moves. Understand market cycles and remain calm during crashes. Use downturns as opportunities to accumulate or position strategically. Timing and vision matter. Early adoption of transformative technologies creates disproportionate wealth. Study trends in blockchain, DeFi, AI integration, digital economies, and regulation. Position yourself where value is being built, not where it already exists. The next Ethereum, Solana, or Binance may emerge quietly today. Spot it before the crowd does. Finally, execute and iterate. Wealth creation isn't passive unless you built systems to make it so. Start small, test strategies, learn from results, and scale. Compounding in crypto isn't just financial, it's intellectual. Each lesson, each strategy, and each decision builds your expertise, which compounds into better future decisions and greater long-term wealth. A simple framework: educate, build foundation, explore altcoins, participate in DeFi, leverage NFTs, Metaverse, create systems, manage risk, maintain discipline, execute, scale. Follow this, and you move from aspiration to action, from investor to crypto entrepreneur. Remember the core principle of lazy billionaires. They focus on systems and leverage, not luck. They recognize that in the digital economy, wealth is no longer tied solely to time or effort. It's tied to information, strategy, and early action. By combining knowledge, strategy, patience, and automation, you can position yourself to ride the next wave of crypto innovation. Wealth creation in the crypto world is not about predicting the future perfectly. It's about being prepared to act decisively when opportunities appear. In conclusion, the path to becoming a crypto millionaire isn't a gamble, it's a strategy. It requires vision, discipline, risk management, and continuous learning. If you follow these principles, engage with technology, and act strategically, you can participate in the creation of the next digital fortunes. And as you step away from this roadmap, remember, crypto is more than money. It's a revolution in ownership, freedom, and opportunity. The digital age rewards those who learn, adapt, and act. The question is not whether you can become a crypto millionaire, but whether you will. As we close this journey through the strategies, systems, and mindset needed to become a crypto millionaire, but the fact is, having complete knowledge of crypto won't guarantee success. To become a millionaire, you should have a complete understanding of money, how money actually works, the mindset required to earn, keep, and most importantly, multiply money. To get complete knowledge about money, click on the video popping up on the screen.